Today's talk focuses on the fact that is 1300 the next target we now have for Tesla stock price, given that we're now over 1100 and we're kind of exceeding our typical acceleration digits. This is Greg for Teslafaninsight. Thanks once again for joining us. If this is your first time, welcome. If you're a repeat visitor, welcome back. We also want to thank our Patreon supporters as well as our subscribers. Your support makes all the difference for this channel working and is greatly appreciated. If you'd like, please take time to like and subscribe as well. So I also wanted to note that this is a copyrighted broadcast. Any reuse of the material presented is prohibited, and we'd appreciate it if you keep your channel and we'll keep ours. So I had a conversation this week with one of our viewers who's also a Patreon supporter, and we were getting into a conversation about what's going on with Hertz. So his argument was that with the Hertz numbers being presented, there should be a 3-day rule that bounces off of that production number, and so therefore that would give us a nice 100 to 200 point run for Tesla. My argument was that we've had a heck of a run from 800 to 1100 bucks a share in a week. Is a heck of a move. That's over 20%, as you can see. So the question that was coming up is, what's a realistic destination for the stock and why? So one of the processes that we use for this show is something I call handicapping the big dogs. So as we've discussed numerous times, and hopefully you recall this, one of the things that's going on here is that there are small owners of stock, 1,000, 2,000 shares. That's one group. There are bigger and bigger owners, so some owners own millions of shares. So one of the things we've ended up doing for our show is kind of watching the difference between how one tranche of investors responds to Tesla stock or earnings announcements or production announcements, and watching how another group watches the exact same numbers and has a completely different opinion about where we are. One example of this comes to mind is if you check right after Tesla's earnings, the stock pre-market the next day had actually dropped by like 18 bucks a share. So the first group that we hear from is the hedge funds and their sense of where things were at. So right after 4:30 when the announcement of earnings came and we saw the hedge funds' first reaction, then combine what we saw pre-market, this is the second quarter in a row where we've seen the hedge funds say, look, hey, the numbers were great, but the stock price fully reflects all of your potential for the stock currently. So basically, this is an almost waste of time announcement because we've already got numbers from production, etc. And so now I watched it and I was in agreement that much of the run that you should have gotten from production numbers was already felt. So then the next thing that happened, as you may recall, is that we had at the beginning of this week the announcement from Hertz that they were going to do 100,000 vehicles and put it into their fleet. And my question was like, are they going to start working with fleets to have cars go there? How is that going to work? The answer that came up later on was that there's going to be Uber drivers able to get Model 3s now via the relationship with Hertz, and that would put a lot more Teslas on the road. And Elon indicated that those vehicles are going out at full price. So bottom line is that 100K more vehicles out there. The raw number wasn't that huge, but one of the things that happens, and I have to agree with our friend Carlo for the show, based on what we've seen, is that there's a discounting process. So once the analysts got the earnings numbers and got to look at the whole balance sheet, there was a number they had in mind, and we saw those upgrades to reflect that. Now we add the Hertz activity, and this introduces some interesting questions that represent a big boom for Tesla. So those questions are this. Number one, hey, congratulations to Hertz for making this decision to put Tesla in place. The questions that come up is, now wait a second, if Hertz just did this, can competitors around the world afford to not respond in kind? So that's Lyft, that could be other car companies. And how many cars is that worth? So let's say my argument was maybe that's 50,000 extra vehicles sold next year because of competitor response to Model 3 becoming a Hertz standard. So the next issue is that, you know, I just threw out a number because I thought it was modest relative to what Hertz can do being the biggest company. But in theory, what if as an analyst you said, hey, that number could be 25,000 extra, it could be 50,000 extra. What if they decided that it's actually 100,000 extra vehicles? So instead of just the 1 month of production for Tesla that might occur off of that 100,000 vehicles over the next 14 months as these are distributed, what if what the analysts are talking about is that we in essence have to add a month of production just for this new seller? So this in essence adds to our backlog when we're dealing with how do you forecast what Tesla's numbers are going to look like. So this is why you'll see us spending an inordinate amount of time saying, oh, X occurred, and that's great. Now, what do the major investors think about it? Because what a market is a difference of opinion of value. And so the perception of value the hedge funds had and the perception of value that the large institutional investors had, completely different party. And so now we can start playing this game of, hey, those two have a difference of opinion, and that price value is basically $250 worth of difference of opinion. So this is why it's so important to start to handicap how news impacts what we're seeing from different entities, shall we say. So I bring all this up to just highlight the fact that I have to say I was wrong this week, because what's actually going on in my mind is what Carla described, is that there was an initial 3-day rule that went on relative to how analysts were receiving the numbers. Then what happened was that we had to go through an entire brand new 3-day rule related to the Hertz numbers, because you have to attach all these question marks to what's going on there. There's some interesting stuff. For example, Tesla has a rule that if you own 6 vehicles that are Teslas, they'll throw in a supercharger at your house or business without extra cost. You have to pay for electricity, but they'll throw one in because of the number of vehicles you've produced. Well, what happens when you do 100,000 vehicles? I believe what this means is you now have superchargers that they're going to be sitting at the Hertz facilities. And if, in theory, that could be a profit center for Hertz if other Tesla owners ended up fueling up there. But at minimum, Hertz just has its own facilities with which to charge up the vehicles prior to them going back out to customers. So I think that this is, without being stated, a no-brainer part of the deal, because that's too many cars at one facility, perhaps, to get it all charged up if it was just a 6 to 8 hour overnight charging situation for every car. And all those cars that could be going back out are screwed, because you have to wait all that time before they're charged up and can go back on the street. So basically what I'm getting into here is just the fact that I've been holding my head all week and trying to avoid doing a show, because one of the problems that can happen is that sometimes you get into what I call the euphoria situation. So when you're seeing these analyst projections, what they're actually saying is they're calling up the giant funds and saying, excuse me, sir, you make $25 million a year because of your good judgment. And I'm giving you permission to buy Tesla up to this price point. Now, if you go over this, you're screwed. I'm not supporting that. So what's going to happen here is that the investors who gave them the money to manage are going to say, oh, if it goes well, there won't be any arguments, right? If it goes badly, the investor is going to come back and say, you dummy, how in the world did you make the decision to buy Tesla shares at this stage or at this point? And so that person making $25 million is saying, I got to have a good answer for my investors and what we did with their money. And one of the ways I CYA is I go to the analysts and get their recommendations. And I use those recommendations to help control the movement of dollars within our fund. So bottom line is that I think Tesla's green lighted into that 1200 zone, possibly even to 1300 at this point. And, you know, it's amazing to watch some of the back and forths that are going on. For example, yesterday, I was highly confident there's no way that the big hedge funds would allow Tesla's stock price to get beyond 1100 at the close of this past week. And the answer to that was wrong. The amount of money coming in from the institutions that have been green-lighted on putting money into Tesla was so large that there was no mercy for the funds that were trying to squeeze Tesla in a pin position on Friday. So again, the main reason why I didn't want to do a show for a couple of days as all this was happening is that there's a number, well, bottom line is a discounting process. It used to be a 20% Elon discount. Maybe it's a 5 to 10% Elon discount right now. So basically, all you have to do is take the growth rate of Tesla and multiply it by the earnings, and that equals what the stock price is that everybody can agree on. So all of those $25 million earner people don't have to sweat bullets if they're buying at a position where the growth rate and the earnings come together to deliver a certain stock price. And so that's generally how the analysts are coming up with the numbers that they're delivering. Well, the question mark is, what if we change some things? What if we add 100,000 cars for the coming year, right? And then perhaps another 100 the following year. There are all these games you can play with these numbers to determine, oh, you know, there's a lot of in-motion data points here that one might want to consider as you evaluate how this is all going to work. So my hope, and again, the reason why I didn't do a show until now, is that I'm kind of worried about the fact that we've made such a massive run that we're now in the position where it's like, okay, Tesla has a history of doing this routine where the target number is a certain number, and then all of a sudden the price rushes past what the target number should be, and then everybody gets crushed. And I really hate when that happens. So my feeling was stay out of the mix and don't say anything, because when that happens, I don't want the blame either. And I really think we're at the apex within $50 of where we should be for the next several weeks. You know, we're entering, and then we enter what's called consolidation, where the stock price sort of gets to a number and then it'll pull back 10, 20 points, it'll push up 10, 20 points, it sort of gets into that zone. We ain't arrived there yet, and I do believe that the 3-day rule is the reason why we haven't arrived there yet, 3-day related. Another reason why I didn't like the idea of the 3-day rule here is, let's say I come to you, so think about what's happening to semiconductors right now. What happened is that they built a factory capable of a certain number of chips. Prior to building that factory, they went to Apple and several other companies and said, how many of these are you going to buy? So Apple said, we're going to buy X number, right? And then you did the same thing with other manufacturers. The chip plants are so expensive, you can't afford, you know, when you're building a $20 billion plant, a $50 billion plant, the amount of money being put to work has to be anticipatorily set up for production. So that way they don't get stuck, and because they have profit margins and they could lose a lot of money if they didn't have this well organized. So when all this new demand from other auto companies wanting to produce EVs came up, when all these other things came up, all of a sudden they're like, well, thank you for the order, we'll put you in the backlog, but all the production we have has already been committed to other entities. So we can give you chips, but it's between 1 and 2 years from when we started you ordering for us to give it to you, because in theory we can add lines, but we also have to introduce equipment that takes time to get into that building as well. So this is why we mentioned that when the auto company said, hey, we got a chip problem, and this was the beginning of this year, 2021, when they said, hey, everything's great, a lot of demand from consumers post-COVID, everything's fine, we just have a chip problem, it'll be done in 6 weeks, right? Well, when I heard that, I was like, whoa, that's a shocker, because of the process I just shared with you on how long it takes to get a building up and get the equipment to put in that building. Shout out to ASLM, the Dutch manufacturer of chip production equipment that doubled this year and will double again next year because of how this problem is playing out I just described. So I wanted to note that my feeling on this whole thing right now with Tesla is that the run has been awesome, and I want to encourage you to consider, if you stay in and you don't have any hedging in there, just a little bit of hedging, 2% of portfolio value or something like that in the short term, I think would be a smart move, only because I feel like if we're making a run right now, it feels to me like we're about 95% of the run we're going to have for the next 4 to 6 weeks. The answer then is, what if we're at, I think we're in the last third of the run for sure, not the middle of the run, but it's my feeling that the acceleration of the value of the stock starts to slow down until we have other catalysts like new openings of this manufacturing facilities, in Germany and Austin. The other thing that's going on right now that I think is really interesting, that's starting to shape all of this, that I just learned about this morning, is, as a Tesla analyst, I want to ask you to read once every 2 weeks news from something called the South China Post. And when I looked at their articles for this morning, one thing that popped up was September's production was at 56,000 units out of China. So look at how those numbers are moving. I mean, the production in China actually exceeds what's going on in Fremont right now. But at the trajectory pace that China is accelerating, I think Q1 of next year, they could actually hit 100,000 units in 1 month. So more realistically, based on how they're doing, they're going to hit, call it 70 to 80,000 units, something like 70, 80,000 units produced in China starting in January on a monthly basis. So what this does is it means that Tesla has all these extra cars they're going to be getting to customers and all this extra revenue. I think probably Q2 is where we get to 100,000 a month coming out of that facility, but you get the drift here. My problem with what's going to happen with Hertz is that, wait a second, you've already got a shortage of cars. The cars you have are committed. How are you going to deliver another 100,000 vehicles in the next year to new customers when you have backlogs on the Cybertruck? Backlogs on every vehicle you have are out there. So people are just buying other things currently because they can't get Teslas. So I was confused on how all this is going to work. Obviously, one of the answers is if one of the two factories gets up and running, or both, the extra cars are no big deal. But with them saying, yeah, we're going to have it by October, and then now they're saying we'll have it by the end of the year, and then it feels like what they're saying is going to be coming in at the beginning of the year next year. There just seems to be a lot of unknowns about this new production, and it's my feeling then that all the Hertz good feeling is affected by the fact that they don't have the production capacity right now. Now, yeah, the other argument against this is just the fact that look at China's growth of number of vehicles produced and sold on a monthly basis, and that should give you a sign of where we're going, which is it doesn't matter if the new facility is open, there are increasing number of vehicles coming from the current facilities. So then we can justify the higher price right now because they're actually going to get cars in a fairly timely fashion to fill out this giant order. So I just think that right now Tesla obviously is doing great. I think that, Friday when there's a Tesla up until the last week and a half had like a 20 point per day up or down, or up 10, down 10. All these, we've gotten into a 20-point swing. Friday was the first time, other than big announcement, that we got into this, up 20 points, and then let's keep going, up 35 points, and even after market, we're up 50 points. So without the market crashing, while these good earnings are coming in from different companies like Microsoft and Apple and all these guys, I just think that Tesla is, I think it's 90% of the way to where we're going to go in the short term, and then we'll go from there and see what happens. So, and I hope you're able to make some good money during this period. I do think that a new factory would create a whole new run for the stock, because now we can deliver vehicles to all those backlog customers. Is kind of what we're waiting on right now. So I'm looking forward to seeing what the next round is for Tesla, because it's been exciting to see the stock move. I'm glad you're making some money in the process, and we hope that you keep making some money in the process. Just a reminder, please take time. We do have some SpaceX shares. If there's interest, please drop us a note, either on Facebook, or you can drop us a note with the email below. Please also note that this is a copyright broadcast. We also wanted to encourage you to like and subscribe. And if you want daily sort of investment tips, ideas, please join us on Patreon. And we actually look forward to constructive comments and criticism. I think that one of the other catalysts that we're waiting on right now is, what if a competitor to either Uber or Hertz decides to do another large Tesla order? And I think something like that is one of the additional catalysts that could force us into another round of 3-day rule and a nice push for the stock again. So at any rate, exciting times for Tesla. Congratulations. Just wanted to remind you of our health tip for the day. Don't forget, do not go to bed within 4 hours of eating, minimum 2 hours to let the food digest before you do so. One other tip came from a dentist friend who suggested that hydrogen peroxide in a 20% or between a 10 and 20% dosage once a week in terms of bad breath and better mouth health is a good idea, something to consider, read up on before doing. At any rate, this is Greg for Teslafaninsight. Tschüss, German, au revoir, friends. Lehitro, Hebrew, Chodah Hafez Farsi. Здравствуйте, hello in Russian. Das vidanya, goodbye. Namaste, Hindi. Salam, Muslim. Hey do, Swedish. Good day, our friends in Australia. And in Jamaica, we say, enough respect, walk good man. Thanks for joining us. And asante in Swahili. Have a great day. Bye for now.